Good afternoon, everybody. Welcome. Hope you're doing well. Good to see you, Ian. Ian, I'm not sure if you are aware or not, but if you hover over the channel that we're currently in, on the left-hand side in the column, there's a little sort of chat bubble icon, and you can see if you hover over it says open chat. So if you can open the chat that way, and then you'll be able to ask questions or anything whilst we're working our way through the charts. Other people will be trickling in over the course of the next 10 minutes or so, but we'll crack on. So, hope you're doing well anyway. Been a little bit slow today, I think, with regards to the current nature of the price action and the assets we're looking at. We've obviously got a lot going on with the fund at the moment. There's been a great deal of market participation this week, that's safe to say. Yesterday, we saw a huge loss in UK Brent. Obviously, we weren't in any of the move, but the gravity of the level that we had marked out for that last long that we took, excuse me, for the 1 to 2.77. I mean, it really did kind of blow me away, to be honest. That was the largest single day loss that we've had in oil for a long time. In the space of a single day, losing 5.47%. Good afternoon, Matthew. Good to see you. And good afternoon, Nadia, as well. Good to see you. Guys, if you could give me a quick sound check, please. That'd be great. I think the sound's coming through fine, but... Excellent. Okay, great. That's great. Yeah, so really significant sell-off. Thanks, Ian. Really significant sell-off yesterday in the oil markets. We've come back down now to our base rate at around 77.20. We're currently trading at 77.56. I think the trend continues from here, regardless of the fact that we saw such a significant sell-off. I think that just kind of promotes good buying interest now that we're back down to where the money is. We've seen that there is a lot of money in the market. We've got these areas all over the place. You know, we've got this area in here. We've got this one and this one. So every time we've reached these lows, we've had these sort of major inflection points take place, big breaks of structure, really nice big moves coming up here. They have decreased in size over time, but now that we've got this area that's kind of, you know, come back up to this point here, and now we've retested this area. This is a major area where the market's seen buying interest repeatedly. So I would be of the frame of mind that we're probably going to see that buying interest start to take place yet again, which means for us that we can be looking to get in on this and then ride the wave back up. Now, I'm not too confident. I'm not too optimistic about the market rallying back up to 81.35. I do believe that is where the market's heading to, but I don't want to be taking the entire duration of the move. So for me, I'm going to be looking at the areas like this, for example, for a TP. Now, the breaker structure element of this has already kind of taken place, but we have dropped back down again. We've got a good breaker structure element here and we can be looking at. Okay, so we've got a nice resting liquidity. So obviously there's, you know, part of the stage of accumulation happening around here. We've got the breakout underneath. We've come down. We've dipped our toes into the big liquidity down here. And now we've had this immediate sort of bounce, but it hasn't really led to anywhere. So I think if the market can breach this area at around 78.111, we'll be well on our way back up to around 79.50, 56.8 up there. So the plan here, breaker structure, pending order, 0.25% risk, Stop loss at the 50% point between these two areas. Probably, I mean, we're still getting a 1 to 2. That's a 1 to 2.8. So that's a really nice yield on that. So I would have that in as the trade idea. And then with the understanding that if the market does indeed break up to this area, we could then look at another long, just the same way as we did here, and have that in there. So then we would be running the two halves, and that's what we would be looking for here, really, sort of breaking this margin down into the two halves. Obviously, we're going to be naturally mitigating some of the risk here via the market exposure, being in the market for that long, you know, cutting that down by half. And we're also going to be maximizing the returns, as we always like to do, because we're going to be looking at the one trade here for 1 to 2.8 and the second trade for a 1 to 2.8, basically. So really nice return potential for both of these. Now, if oil drops down, unfortunately, I'm uncomfortable taking anything between 77 and 75.50. In which case, we'll be looking to take the oil short again, as we lost out on the trade here. Now, that trade, there's nothing wrong with it. I like that trade, and I will be prepared to go in again on the basis of the market coming down to this area. I'll be looking for the same, to be honest with you, I'll be looking for the same breaker structure as well. So that trade will be almost carbon copied. But if the market does decide to dip, we won't be able to take anything in between this kind of space. Excuse me. Right, moving on. Looking at gold. So gold had a big sell-off. Well done to you, Matthew, first of all, for taking your little trade and winning it today in gold. That's good to hear. Gold at the moment's been hugely in a rest phase. We had this big sell-off. We had this really unattractive price action leading up to that point as well. Very gradual slowdown here, looking at this. And then we kind of had this, you know, last rally. Very, very nice bull trap here. We saw the traders getting sucked into this one. Huge sell-off, big breaker structure, big push down. Got a bit of a W reversal going on here, but it didn't really end up going anywhere, right? It didn't lead to anything significant. I think gold still goes long from this area. So looking at this is a really nice breaker structure element again. Really nice level at the moment. We've seen a lot of interest, a lot of seller interest. Every time the market comes up here, it's being beaten away. But we're actually forming higher lows, right? So because of this, it does lend us to the idea that the market is still preparing to jump long, because we're still coming down, we're forming these higher lows, and we're coming up to form the same high. So my idea here is to take the trade idea between these two margins. We're going to be looking at, again, standardized risk format here. It's, yeah, 1 to 1.8. It could be a bit better. It depends if you know, we're going to be really sort of stringent on our technical setup. If you want to get in right at the cusp of it breaking the structure, you might be able to squeeze a 1 to 2 out of it. But a 1 to 1.8 is absolutely fine. I'm happy with that. So that will be the trade idea. This can be a pending order. Okay, so you can lock that into the market, and yeah, let your money do its work. And that's what I'll be looking at there for gold at this time. In terms of the short, to see if there is anything on the other side of the market, we have this point of liquidity here. Now this is a big inflection point, very, very significant. And we get a double retest on the way out of it as well before we get the continuation. And so therefore this would say to me, we don't want to be fooling around. And we don't want to be taking a trade here because of the ascending level that we've now got running through the chart, indicating that we are going to jump long. And so therefore the short doesn't really work in this parameter. The market might dip. It could come down to here. If it comes down and it breaks this ascending level, then we can simply delete it because it is no longer intact. But for the time being, we are going to have that level in there because it's still holding firm. And on the proviso that it does get removed because we do break down to the low, it means that then we can look at taking the trade from a rejection of this point at 26.04 up to the point that we're looking at for entry for that second trade. And then with that in mind, we will be looking at the pretty similar setup as both of these oils of breaking the margin down into two. Risk mitigation, profit maximization. So we'll see how that one goes. That one's going to be a blue for... actually, no, that's only going to be a green. It's two ideas, but still only bullish. Right, so Aussie CAD, we already covered that one anyway. Aussie CAD at the moment is looking like a complete mess. It really isn't looking very sharp at the moment. I guess I can begin to delete some of these zones around here at the moment, but it's really not looking that friendly on the 15-minute time frame. On the daily chart, it doesn't look too much better. I do like the fact that it's trading on top of this big point of liquidity on the daily. It does give us a bullish bias. The path of least resistance is certainly to the upside, not the downside. But there's a lot of indecision going on here at the moment. We have an inverted hammer candle, we have a hammer candle, and now we have a doji. I mean, if there isn't any more indecision than that, according to daily patterns, I don't know what is from a technical perspective. In terms of the fundamentals at the moment, we don't really have much of anything coming out for the Canadian dollar until we see that unemployment data. We don't really have anything for the Aussie dollar after the fact we had the RBA minutes previously, a couple of nights back, maybe Monday night or Tuesday morning early. So we're pretty much clear in terms of fundamental catalysts here. There is just simply a lot of technical, or a lack of technical biases going on. So we're going to have to be quite vigilant, I would say, in our approach to this Aussie CAD. Not to say that we have to have a trading opportunity in there. We certainly don't. And as it happens today, I'm not going to be providing any fund-related ideas for this one because I just don't like anything. It looks very messy, it looks very choppy, and you can see even on the daily time frame, right the way down to the 15-minute, there is too much indecision. So if something doesn't make us feel warm and cozy inside, then generally that's not going to be the right choice for us. So we're going to leave that one out and let that one go for the time being. Aussie yen. So Aussie yen at the moment is doing what it's doing. We haven't really seen any major movement in our sort of given direction. And we've got this big breakout down below here at the moment. We don't really have any significant retest continuation. It's looked very choppy, very similar to the AC, I guess you could say. But we did have obviously the influx of Japanese yen. A lot of buyers came into the yen on Friday at around the similar time as the NFP. And as a result, obviously, we've seen these quite dramatic moves. But on the daily time frame, if we look at it from here, let's just have a little look there. The daily time frame, it was looking really nice, but not so much anymore. So at the moment, the Aussie yen is going to be completely flat as well. We've got nothing in there. Got to see some more consistency. Have to see a breaker structure above 101.30. Or alternatively, I want to see this floor broken through at around 98. Not to say that we can't take any trades in between because there's still quite a large trading margin. But right now, looking at this is it's just too much. I don't want anything to do with that one at the moment. Okay, Aussie NZD. This is a breaker structure trade. We had this big move. This was it right in the middle of the morning, about 2 a.m. Straight the way up, 1 to 2. From that point on, it's actually continued to rally. It's done very well. And we are currently trading at 110.77. Now, I'm looking for a break close and a retest of here. This is as per the plan of attack for the previous, from the previous couple of sessions that we've done this week. I am looking for that break close and retest to come into play. Now, if we look at the 15-minute time frame here, we've had one attempt, no retest. We've now got the breakout. Now we need the retest. Okay, so if we look at the daily, check our anchor chart. We've still got that really nice trading margin from here to here. But we want to see that close and that retest and that continuation. So at the moment, we've got a couple of parts of the process achieved. Now we need to be patient, wait for that price action to come back down, hit liquidity, and then we see the surge. And when we see the surge, then we can get involved. Now, Ian, I appreciate this is your first session with us today. So a warm welcome to you, buddy, being in the session with us. Now, in terms of the pending orders, we cannot actively set pendings before the break close retest has completed. So what we would be looking to do is set ourselves up so that when the market comes up to this area, then retest, it's at this element of the process, this part of the process here, that the pending order can then be set. So then when the market gets going, it will trigger the trade and, away you go. And that's how the process is set up. The best way to do that, and I'm sure you're well equipped, you're well equipped already to know how to do this, but we just simply set up some alarms. So if the market's broken out of an area of liquidity here, all we need to do is just hit the little plus, set the alert in. When the alert pings and the market's hit your given level, essentially that's when this is your pending alert. And when that alert beeps, you can then set your pending order. So if you want to see a push in the liquidity to 110.60, when the market comes down, it hits your alarm, bang. You don't even need to check TradingView or your charting software. You can go straight to the broker and lock that position down via pending order, and then walk away and get on with your next trade or whatever you want to be doing. So next up, CAD Yen. This is teetering on the very edge. We'll come on to the Euro Yen as well. There, Euro Yen was a loss after all. The CAD Yen is looking, unfortunately, very unlikely it's going to be working out. It's never over till it's over. We certainly know that much. It will be a shame as we got so far down towards the target, but it is right on the cusp. Really is right on the cusp, and it's actually trading above my area of liquidity now as well, which doesn't really promote confidence in the position at the moment. So, in terms of future trade ideas in the CAD Yen, of course, we still have the long up here, up to that 110 area. I'm not really a fan of taking any trades between these two margins either, because of the fact that we have so many TRFs or technical risk factors, which are in this part of the process here. I mean, this is a lovely void, really, really nice trading space. Major inflection point here at around 108.96. It actually receives a rebound retest element here. Rebound, retest. So that's a really big TRF. I don't want to be messing around with that. So the market has to break through all of this. Then it can trigger our long pending up here. Or it alternatively stays short and it continues all the way back down to 107.80. Which obviously would be favorable for the fund. But we'll have to wait and see on that front. Euro Oz. This one at the moment, literally scraping through. This is ridiculous how close this came. I mean, we've certainly seen worse than that, but yeah, I would say that this is probably not heading to where we want it to head to. It doesn't seem to be making any significant progress to the downside. That's the unfortunate thing about it. Apart from the fundamental catalyst we had that sparked the selling interest here overnight, or really early in the morning, mind you, it's about 6 a.m. It's not done anything else. It's sitting at break even. So because of the fact that we have a bearish path of least resistance, but at the same time the market's not forming any significant lower lows, remove this from our minds because this is fundamentally driven. This is where we really are sitting at around that 162.67 area. It tends to lend itself to the idea that the institutional liquidity is actually still on the buy side and it's not ready to get the sell-off going to 162 yet. Again, the trade's locked in. It's in the market. I'm not going to be messing around or manipulating it now. What will be, will be. But not got so much confidence in that one as of yet. And I can't provide any more trading opportunities until it's cleared out. And so, Euro Yen was unfortunate. We did incur a loss on this one. It actually didn't take place until about 10 o'clock, something it was. Yeah, 10... Yeah, sorry. Yeah, half 10ish. It got knocked out. So that's it's pretty much dead now. We are coming back up to big liquidity. The good thing about this is the fact that we can look at a more aggressive entry for our second attempt if you are game for that. I like the euro yen up at this area. If we look at the daily time frame, which I love to do, anchor chart all the way, we've got so many attempts at this area at the moment on the daily. If we go right the way back, all the way back to here, we've got multiple occasions where the market has seriously dumped when it's come up to this area at around 163. It's a big one for the euro yen. We've come up to it in recent price action, and we got the same thing happening again. We've come up to it this time here, and we've got this really nice big sell-off back down to around 158. Bearing in mind, guys, we're talking about a few hundred pips here. So this is not a small distance for the market to move. It's quite significant. And, you know, are we looking at that possibility again? I think so. If we do go for the bullish breakout, it's going to be a long, drawn-out process. This is a daily time frame. It's going to take several days to complete. We need to see the daily breakout, the daily retest, the continuation. We're at least talking about 5 days here of price action before we're going to get that bullish bias confirmed. On the 15-minute time frame, however, we can be looking at shorts instantly because of where we're trading up to. We just need to really nail down that breaker structure element. So what I'd be looking at here, I mean, what do you guys think? Looking at this chart at the moment on the euro yen, is there anything that you think looks like a pretty decent area to get in for a short? I don't think the target profit works for this. I think the target profit's nice, it's well thought out, but I just think it's a little bit over optimistic. I'm thinking of something a little bit more shallow, and possibly a breaker structure at around 162.85 with a target profit down here at 162.40. Maybe a 45 pip trade rather than the monstrosity that we've got going on there. So let's have a look here. Let's retract that. Current price, breaker structure here, which is not bad at 162.82. And then, of course, we're looking at that area, which is the most consistent. So if we look at this, and that's going to be our new trading margins, then pending order in the market about there. Yep, target profit at around 162.46. Stop loss is going to be at 162.90. And that's yielding a 1 to 2.5. You know, that's a 1 to 2.4. So to put things into perspective, that trade idea will probably yield more than this. Well, not probably anything. It will, right? It's black and white. So, yeah, I like that. I think that's quite good. What do you guys think? What's your guys' view on this euro yen short? Any potential risks you think they're overlooked? Anything about it you might have to think twice about? Yeah. I think so. It's a simplified form, isn't it? It's a major simplified view of what's been going on previously. So pending order 0.25%, 162.77. Entry, stop loss 162.90. Target profit 162.46. Just walk away and let it get to work. Okay, Euro NZD. We had the push. We did have a bit of a dip, and that was that. 179.58 was my entry on trade. According to TradingView, we hit that exactly at 179.58, but my trade didn't trigger. So there's obviously a 0.05 of something that's not on for that one. But, at the end of the day, I'm not going to kick up a fuss about it because it saved me from that trade, which would have been a stop. I actually still like the Euro NZD short. So I'm going to leave it in the market. I'm going to leave it exactly where it is and wait to see what happens. If we get the big breakout retest at this area here, around 180.85, then happy days. We will look at bullish biases, but for the time being, I think this is going to come back down. GA. No, I'm still not a fan of that one. GC is long gone now, hasn't it? I think we should pretty much consider that to be over and done with. So I will make the executive decision to remove this from the fund, and everyone else should as well. So goodbye to the GC short. That's now inactive. And do we have the potential for the GC long? I really, really don't like this. Yeah, I mean, that 179.15 area is a real ceiling. We've only breached it once in those moves. So again, nope. Not a fan of the GC, guys. Going to give that one a pass as well. Pound against the Swiss. This was a complete mess. A complete and utter mess. We dipped down. Big move. Fundamental driven. Came right the way back up. It was over and done with instantly. So that one, yeah. It's a real shame, but it's out. This one, at the moment, really nice 15-minute trend. I do still have the bias. I think the trend's intact. There's nothing to suggest otherwise. It was just really unfortunate. Just really unfortunate that took place. Do we want to go for a second attempt? That's the thing, you know? There's been a lot of ranging at the moment, hasn't there? A lot of ranging. If we look at the other times, we've been trading in the upper limit of the trend here. I would say that almost every single wave that we've had in this trend so far, we've had a similar element of price action at the top. So all these highlighted areas. The only one that's slightly different is that one, where it arcs. But every single one of these looks very, very similar. And every single time has yielded big moves. So if we're looking at this from purely a probability standpoint, we've had 4 successes in this trend so far. Probabilities would suggest that we're going to get that again, doesn't it? If we break it down into real simple patterns like this. So I think a second attempt is on the cards for me. And I'm going to go again. Leave that one there. And I'm going to go again upon another breaker structure. Now, this is currently showing a 1 to 2.12. I'm going to make a couple of changes with this, though. I'm actually going to go more aggressive on my entry for this G-Swiss, but I'm going to do it in such a way that actually provides a better stop loss because of where we're trading at the moment. Because we've been given the opportunity, because of the time that's taken place for this wave to complete, it's given us the opportunity to get the upper limit of the trend inside the stop loss. And so what I'm going to do is this pending order, I'm going to set up the entry for it at 112.135, and I'm still going to only look for my 1 to 2.12. So exactly the same trade. Let's just call it there. That's fine. So exactly the same trade, exactly the same risk-reward ratio, but with that more aggressive entry has given me a much greater stop loss. And now the stop loss, on the basis that the market, you know, possibly does this a little bit and then breaks through, if we are to come back up, not only are we protected with our liquidity, but we are also protected by the upper limit of the trend. And we're now accumulating areas of defense. You could go even a step further. To be honest with you, you could even have that a little bit more aggressive. Bring that up to 112.14, and then bring that stop loss up to a 1 to 2. So you're still looking at that 0.5% return or 0.51% return, but now we've got a lot of the upper limit of the trend inside our stop loss, which would be even better. So I'm going to leave it at that. That's the one I like. So I'm going to do that. Entry at 112.14, stop loss at 112.36, and the target at 111.68, same as the last. And that's going to yield a 1 to 2.06, leading to a 0.51% return. 0.517 or something, actually, so it's going to be more on the side of a 0.52 return. Okay, let's go. Pound yen. What time are we on? 1 minute past 2. Right, so pound yen. This one's been pretty dicey. We were looking at the rejection from this area to come up, which never happened. Or we were looking at the push up in the liquidity and then the breaker structure, which hasn't happened yet. Unfortunately, it's just been cruising in between these two trading margins. Now, the margin for the long is significantly reduced because of the nature of the price action. So if we do look for the long target is actually going to be, oh, whoops, that was the short target, long. So the long target is going to be up there now because we have to run it with the ascending level. Okay, so this then becomes null and void, redundant. And the next area of interest that we're going to have in our charts is going to be here instead, which means the entry is going to be about there. The stop loss is going to be all the way up here. And we're still looking for a fantastic risk reward in that one, right? Absolutely fantastic. But we just remember that we have to bring everything up. Same as the short. The short trade is now changed as well because obviously we're going to be targeting something much higher. So target's probably going to be there. The entry remains exactly the same on the short. And the stop loss is pretty gracious on that one. So I'd bring that one right the way down to a 1 to 2.3. Now remember, these aren't pending orders. These are to be carried out yet. Nothing in cable. NZD CAD, nothing to say about that one yet either. NZD Swiss in the actually, to be fair, this one at the moment looked really nice for the trend continuation. We did have this long in, but this wasn't a pending. We were waiting for that BCR and then getting it in, which never took place. But this one for the short was actually it's actually not looking too bad. Look at the daily. Look at that daily candlestick that we've got there. Big breaker structure. We've got a TRF on the daily, but the big point of liquidity where the action happens is arguably at this area in here. That's where the action happens. So the short on this one was really nice. I don't know if any of you guys watched the NZD Swiss for that. I was watching this. The only reason I'm making a point out of it is because I was watching it. I was watching it play out this morning. I should have posted something, but I didn't think it was quite ready to go. But it does look like it will. I mean, frankly, this area right here is not a bad place to check in. We've got the breaker structure taking place. We know the destination of the market. Definitely know that destination is going to be down there. Decent entry, decent stop loss as well. I mean, you're looking at a 1 to 9. That's a 1 to 1.9. What's wrong with that? There's nothing wrong with that at all. That is a solid trade as far as I'm concerned. I'll tell you what, folks. I'm going to log that in. I'm still going to have a stab at that one. Yeah. Market order. Entry ASAP. Stop loss 52091. Target profit 51888. You're probably going to see some kind of retest. Right, mine's at 5203. You're probably going to see some kind of retest. Yeah, you're probably going to see some kind of retest maybe of that area. But yeah, we'll see how it goes. Right, NZD USD. Didn't get anywhere near the trigger point. Unfortunately, that's fine though. Trend has continued straight through liquidity. It hasn't seemed to be impacted by it whatsoever. Really, really strong bar down there. Really strong. It's not out of the woods yet, though, this one, because of that area in there. So I'm still not going to clear this for approval for shorts yet. Tomorrow may well be the day, but not today. The target profit on this one is absolutely crystal clear, and that is a really nice trading margin. So it could be setting us up for something absolutely wonderful soon, but it's just not there yet. So we'll check that one out again tomorrow. This pending is removed. That's gone. USD CAD is well underway at the moment. This was a break close retest break of structure trade of this area in here. This took place yesterday afternoon. It's making some pretty good progress so far. For those of you who are late to the party with the USD CAD, there are ample opportunities to re-enter at a much later stage. Obviously, we've just had this most recent break close retest of structure in here and the fresh BOS, which has just taken place. You know, you just need to wait for these to happen before getting involved. This is a bit of a longer term trade idea than what we're probably currently used to, I would say. It's probably going to be a bit longer than the ones that we have taken recently, which have lasted a couple of days. And I'd still be expected to be in this one. Definitely through the weekend, I would imagine. It's a big margin to clear. Tomorrow we've got CPI. My hopes are that the CPI, not for any other reason other than this trade, to be honest with you, but I'm hoping the CPI comes out printing a bit of a sticky situation and not such a significant drop. So we'll have to wait and see where that one goes. If it does remain as is or less than what is expected, then the currency should, in theory, absolutely fly. And if it flies off of that, then of course the USD CAD is going to be pretty good. I think the responsible thing to do in that situation is, if we are trading at the current price at 136.83 or anything above, we should be bringing the stop losses up to just above the break-even point, maybe at around 136.60, so that if we do get taken out by the CPI event tomorrow in this position, we're going to be able to pay the broker their fee and moving on and looking at reevaluating the situation. Right, team, it's 10 past 2 now, so we're going to get onto the US stocks, get you guys set up for that this afternoon as well. There's been quite a fair bit to think about today, I think, even with what's been going on already in the fund. There's a lot of fresh opportunity out there as well. Definitely not been easy trading conditions, and I've heard this, obviously, if you guys have been checking out the general chat, I think the consensus is relatively the same across the board. I don't think anyone's been finding it too easy at the beginning of Q4. Markets are not showing a lot of consistency at the moment. There's been actually quite a bit of counter trend stuff, and there's also been a lack of reaction to certain cash rich areas in the market. So we just have to be sort of really, like I say, really vigilant, very patient, and really waiting for our ideal buying into criteria or selling into criteria, whichever one you're on the side of. Just really showing that consistency and your patience as well. So NAS 100 yesterday was okay. We ended up ripping out a 1 to 3.23. That was absolutely superb. The Dow Jones was not superb. The Dow Jones yesterday incurred a loss on the short. I didn't even bother taking the long in the end, and when it eventually did hit TP, that was at 7:30 at night, so I wasn't even around for that one. Looking at it today, from today's perspective, it's not looking too much. It's not looking great. Actually, it's the first time I've looked at the stocks, by the way, guys. So yeah, it's not actually looking great at all, to be honest. It's looking worse than it did yesterday, and that was pretty hard to achieve. Looking at where the markets are at the moment, we've got some big cash-rich areas up at around that 2015 area. A lot of institutional selling pressure been repeatedly coming into the market around this stage. You can see this taking place. I mean, look at the selling power that we've seen from the banks, right? So because of that information, we don't really want to be going long anywhere underneath the level of around 2017.605 for the NAS 100. And then we've got a major inflection point just above that as well. So none of it looks nice. None of it. The only idea I really see in the NAS 100 at the moment is actually a short. That's the only thing I see. And what we're going to be looking out for here, bearing in mind we've only got 19 minutes to go for the open, what I'm going to be looking out for breaks a structure from a rejection of this area to go short down to the low that we created today. So not the major low, 8 o'clock this morning, but this low here. If we can get down to here, fantastic. That's brilliant. But the ideal would be to see the market come up, reject this area, 1 minute breaker structure, and then we'd be looking at taking the trade down to this place in here. And then alternatively, we could look at taking the market down to this area in here. So there, right? So that's the kind of thing I'd be looking at today. So 1 minute time frame, just to make sure that we're all absolutely crystal clear on the plan of action. Market rallies, it comes up to this area. We break through a counter trend level of structure, which we don't actually have access to at the moment. Possibly looking at the midpoint of the M reversal there, for example. So the market comes up and through this area. We can then, on the way back down, execute the trade here. The short target is going to be at around this area. So possibly down to around 20, let's say 20.095. Okay, which is going to be about this area. And then alternatively, you do have the capacity to take the trade all the way down to 20.050. Something like that. So that would be the NAS 100 setup for today. Now, I don't think we need to be greedy all the way down to 20.050. I think it's too much. I think if we get the push up here and then we get the breaker structure, taking it down to the previous lows that we've just recently had, is going to be absolutely fine. You're still looking at a 1 to 3 approximately for that, which is fantastic. I want to be ripping out those 0.75% returns every day. You're going to be doing some really, really good monthly gains if you do that. What I am proposing is that we actually have an oil setup similar to oil. And we have a level of liquidity in the middle here, which we know is a level of liquidity. And we have the first short number 1. And we have the second short. We have short number 2. And that would be the second trade there. So you got a 1 to 2.5, 1 to 2.5 and a 1 to 2.9. The other thing, of course, you can do is you can look at the rejection from this area to go long. Okay, or you can buy into it down to 20.050, but I don't think that's going to be the case today. So that's the NAS. Looking at the Dow Jones, start up on our anchor chart, 15 minute. Dow Jones is looking really, really awful. I mean, it's looking absolutely god awful at the moment. This area in here can definitely be recycled. It's still intact, still activating various elements of selling and buying interest. So we can use that as a target or a buy-in area. we've got the target up there, and we have a short target as well. To be honest with you, the short target is not going to be too great. That's just going to be the bottom of the low there. And that's going to be your trading margins. So the Dow Jones, very, very small trading margins. We look at the 1 minute time frame. You'll be looking at taking the break of structure trade. Ideally, similar to the NAS, you'll wait for the market to come up to this area, break the level of structure, and go short down to here. And that will be your Dow Jones short. Your Dow Jones long could potentially be a push into liquidity, break of structure at this area, and then that push upwards. Something like that. And then, of course, you do have the option of shorting down here as well, if you so wish. If you want to, if you've got it in you today, that's what you can do. But I mean, looking at the two side by side, I would prefer to trade the NAS 100 in terms of the technical setup. I just think it looks a lot cleaner at the moment. And do ignore my crazy charts. They are looking, to be honest with you, they definitely need a bit of a tidy up, don't they? They really do. So, yeah, there we go. So that's what you're looking at. All right, guys. So, everyone clear? Everyone know what they need to do? Excellent. All right then, team. Well, listen, have a good day today. I'm going to be right here trading it with you guys. Obviously, I'll be chatting away in the Traders Lounge, trying to, keep my fingers and my toes crossed for decent price action. God knows we need it. And, yeah, have a fantastic afternoon, team. And I look forward to doing it all over again tomorrow. So have a good one, and I'll see you then. Thanks, guys. Bye-bye.